All right, good afternoon. It's April 3rd. Man, you'd have thought today was April Fool's Day because we are taking a beating in the markets right now. As of 3:15 when I left work, the S&P was down 4.75%. The NASDAQ was down almost 6%, and the Dow Jones is down about 4%. Everybody's going to take a bath for a while because the tariff has affected everything. Regardless of it actually has taken effect and affected anything directly, people are panic buying and selling. It started last night with the futures and the overseas markets, a lot of those taking big hits. And then this morning, of course, when things opened up in the U.S., it took a 3 or 4% drop almost immediately. So people are panicking, and that's what happens when change happens. People panic. Now, there's a lot of things we can do at this point based on whatever our risk tolerance is. But if you haven't already moved your money, it's probably too late at this point. And if you are in a good diversification situation, you're probably okay. A lot of people are at 60-40, 70-30. If you're retired, you're probably at a 60-40. That seems to be the pretty popular number among people that are retired. I am currently still working, and I'm working pretty aggressive with the market numbers. I'm like 90-10 in the stock market, mostly the S&P. The other 10% is in company stock. I work for a major Department of Defense and aerospace provider. We're taking a bath today, too. We're getting beat pretty bad. Everybody is. The tariffs are going to affect everybody, whether you directly buy these things or not. They're going to some degree. Now, I think everybody needs to remember this is stage one, maybe step one of a bigger plan, because I believe that these other countries are going to come forward and try to negotiate better deals with us, which makes better deals with them, and that will change the situation, and I think pretty quickly. But again, I don't know. I can't see the future, and I'm not going to try to make any kind of prediction otherwise. I'm just giving you my opinion. My plan at this point is I'm going to stay diversified where I am. I'm going to let my money ride in the 401k. And I'm reminded, and I point this out because this is what happened the last time. In 2020 was our last so-called recession. In February of 2020, when the COVID news came out, by the end of March, the major markets had lost 25 to 30%. The S&P was down 30. By August of that year, it had rebounded back to the levels before COVID hit. Once they knew what we could do and get away with, once we realized that everybody wasn't going to stay home and die, things went back to normal relatively quickly. To lose 30% and recover 30% inside of 6 months is a pretty good situation. Right now, I think overall for the year, we're maybe down 10, 12%. It hurts a lot when it's 4% at a time. If it was dropping 1% a week, nobody would notice it as much, and people wouldn't panic maybe as much either. But it's going to be what it's going to be until things straighten out and the ship gets righted. So you have to decide what your risk tolerance is and what you're going to do with your situation. If you haven't moved the money, it's probably too late. And that's okay. I'm going to let mine ride out. If you're in a 60-40 split, you're probably in pretty good shape. If you have your money and you haven't retired yet, but you have your money in a target date retirement fund, they're pretty diverse, and it's based on when you're planning to leave. So they're already change the diversification as you get closer to that date, at least the way I understand it. And what we all need to do is focus on the long term. I'm not going to necessarily buy in this dip, except what I'm already doing with my 401k investment. I'm not going to change my investments either. I'm just going to let things go. I may switch up a few things on future money, like the money I put in from this point on until things recover. I may move that a little bit, but otherwise I'm going to continue to take my situation the way it is. I'm going to invest my cash into high yield savings accounts because I'm on my runway to retirement in a little bit over a year. I want to have cash available and on hand, and I'm hedging my investments a little bit by putting it into a high yield savings and still have it available. And I'm paying the tax on it now because I'm getting it in my paycheck. So I'm paying the tax, so then when I need to use it, I don't have to worry about paying a tax when that time comes. But other than that, I think holding on and running the long-term risk is the way I'm going to go. Everybody has to do their own thing. What works for you is what works for you, and nobody can really tell you different unless you have a financial planner that's got some good advice and good ideas. I would seek them out and see what they have to say about this situation. But other than that, everybody just kind of chill out and let things go, because once people in these other countries start to negotiate their deals with the U.S., things are going to turn around, I think, pretty quickly. So again, I say I'm just going to ride it out and see what happens. Take care, hang in there, and we'll see you next time.